Hello and welcome everyone to Almus Market Mornings, your daily dose of global financial updates. Here at Almus, we are still in a celebratory mood as we complete 10 years of service. Even JK, you're back from the US. I hope you had a wonderful trip. Guys, we have to appreciate the fact that JK is still able to bring us the latest updates, even though I'm sure he is jet lagged coming back from the US. Coming to updates, it's an action-packed day today with the RBI's MPC outcome and the NFP data, which is the non-farm payroll data, which will be out today evening. JK, the narratives which have sort of provided a trajectory for rate hikes has been high oil prices, global inflation rates, and uncertainty due to war. What do you expect out of today's MPC outcome? I request you to break it down for our listeners. What is the market expecting, and what might cause a surprise?
Okay, good morning. It's good to back to Mera Bharat after 2 months of sojourn. Definitely being in the time zone helps me. Yes, Swaraj, a bit of jet lag, but what about the turbulence in the INR market? We have seen big dips and rises in the USD INR in the last little under 2 weeks, and the volatility curve has steepened for the pair. Definitely, it's a time to tighten our seatbelts as the pilot has switched on the sign. It's a double header today, of course, coming back to the reality. One, right at the start of the day, as RBI announces the policy decision and US monthly jobs report to be published after our market close. Going to the RBI meeting, we are definitely in for another rate hike with only the quantum thereof being under debate. It's a mixed outlook from various surveys. Majority is favoring a 35 basis point hike, but a 50 basis point hike, to which I'm slightly biased, cannot be ruled out. Obviously, MPC will take into account the global inflation, which is still at record highs, though expectations have moderated quite a bit. Slowing economic activity in many regions, oil prices, which are corrected from their highs, and the expectation that Fed will remain steadfast in the path to reduce inflation down to 2%, which means there is likely to be another 0.5% increase by them in September and possibly another 25 to 50 BP in December. So RBI will need to see that the rupee yields are kept high enough related to the cut of USD to attract flows, with a strong intent to keep the rupee weakness in check and to avoid imported inflation rising. So from this perspective, I will not be surprised to see a 0.5% increase from RBI. The cooling of commodities along with crude, good GST numbers, rise in PMI, firm power consumption points, they all point towards a resilience in the economy, which can help RBI to focus more on inflation. Once again, that means a 0.5% is something that they can, go far. Definitely, it's a balancing act between growth and, forex and external value of the rupee. Projection are also important. Inflation outlook may be retained at around 6.5%, as there is a constant cooling off in domestic food prices and also global crude prices looking somewhat toppish above 110 for the Brent. Rating agency CRISIL in its latest report expected retail inflation to stand at 6.8%. In June monetary policy, RBI retained the GDP projection at 7.2%. I think they will continue to do that, although the IMF in their World Economic Report for July pegged India's GDP at 7.4, reducing it from 8.2% earlier. So there is an expectation of global growth slowing too in view of the tightening financial conditions. Thus, I'll be interested to see where RBI pegs the growth for India. So that's the expectation. And of course, we have the NFP numbers, which will play a part in the FX market as well as the equity markets here. See, closest to NFP numbers, jobless claims rose again yesterday, and it follows a fall in the job creation depicted in the JOLTS data. They're also early, and of course, some of the surveys in ISM, etc., showed the employment component falling. These are early days, but it is fueling an emerging debate between Fed officials and economists whether the unemployment is rising. Can we have a decline in inflation with an ease in labor demand without a material rise in the unemployment rate? That is key. Some of the major companies, as we have seen, have announced lower hiring plans. More may follow in the coming days, and that could lead to a lower wage inflation and a lower target rate for the Fed. So let me repeat, it's still early, but the signs are that USD will undergo a deeper correction. And lastly, on Taiwan, there are conflicting reports about the drills from the China side, and even as Taiwan shot the drones. China later said it was a routine drill and tried to calm down the market. But interestingly, none of the G7 currencies or the markets, reacted much to what's been happening in Taiwan. But I would not be complacent, just as market was before the Ukraine attack, despite some warnings from the Biden administration. So we will be keeping an eye on that, Asian developments. Just few updates on the markets. Oil has been lower because demand outlook has worsened. Bank of England raised their rates to 1.75% by hiking it by 0.5%, and they expect a recession in the next year. Treasury yield curve has deepened around 36 basis points between 10-year and 2-year, and of course dollar has slid somewhat against the euro and the yen. Even sterling recovered after the initial slide. Just to look at what can happen in the rupee for the day, at least, I would, going with the current environment, I would put it at a wider range of 78, 80, and 79, 30, but it can easily get exceeded because the interest on both sides seem to be quite high. And the, my bias is slightly for some more strength in the rupee, if not immediately, because look at the factor that is helping it, oil price below 100 now clearly, and FII flows. In the first 4 days of this month, we have almost 1.5 billion of inflow. July turned out to be positive after 9 months of heavy outflows. Dollar index has been correcting. Growth picture in India is still good. So all these things, no, I don't think can be ignored. And that too after rupee has weakened substantially in the last 6 months. More so, 80 being well protected by RBI. I think we can expect more correction even below 78.50 in the coming days. For today, of course, we'll have a slightly lower range because the 2 big events ahead. Thank you. Have a great weekend.
Okay, thank you, JK. And I would just like to highlight one important point JK mentioned regarding the Taiwan and China issue. Even though that development is still ongoing, there are still rumors and news coming out. It has caused, like if we see the G7 countries' currency, it has caused little to no movement based on that development. But of course, as JK mentioned, we cannot be complacent. As seen yesterday, the volatility in USD INR has risen, and the past 2 days it has been wild for the pair with swings on both sides. I can't reiterate it enough. Keep managing your risk. Have a good weekend, everyone. That's it from us today. Thank you.